Good afternoon and welcome to Peterson Capital Management's 2025 annual meeting. My name is Jenny Lee and I had the pleasure of being your moderator today. I'm joining from Denver, Colorado, and we're thrilled to have participants tuning in from every time zone and every corner of the globe. So thank you for making the time wherever you are to be with us. Before I get going, I just want to go over some quick housekeeping and technical logistics. Should we encounter any connectivity issues, just stay put. We'll reconvene in the same room and be in within 5 minutes, so just hang tight. And when it comes time for Q&A, once Matthew has delivered his prepared remarks, you can submit questions in the general chat, or if you want to stay anonymous, you can message Tamana directly. There should be an option to message her directly. We'll then curate and present all the questions during the Q&A section. And then as far as duration, we expect our program to run for approximately 2 hours. Those 2 hours will fly by and you'll find it quite informative and productive, so your engagement is invaluable. And again, we really appreciate your time and attention. It's now my privilege to introduce Matthew Peterson, the managing partner of Peterson Capital Management. Since founding PCM in 2011, Matthew has generated double-digit annualized returns for nearly 14 years by combining rigorous fundamental analysis with cutting-edge behavioral insights. Matthew is a CFA charter holder with 25 years of finance and Wall Street expertise, spanning Goldman Sachs, Morgan Stanley, and Merrill Lynch. Matthew is joining us today from Istanbul, home of the Talas Turkey Value Fund. Without further ado, I will turn the floor over to Matthew Peterson. Matthew, go ahead.
Jenny, thank you so much for that wonderful introduction. It is such a pleasure to have you here. We are so pleased. I'm going to work on sharing my screen and the slides. Let me know when these are available. I don't see them on my end. Do you see them on yours?
I do not.
Sharing the screen, and we'll try again.
I can see it now, and I believe everyone else.
Maybe because I'm pinned.
Yeah, I can see it now.
Can you see the agenda now, Jenny?
Sure can.
Okay, wonderful.
Oh, yep.
Jenny, thank you so much for that wonderful introduction. We're so pleased to have you here with us this year. For those who don't know Jennifer, she's a former broadcast journalist with multiple master's degrees and deep market insights. We were introduced at the Berkshire soiree this year at the Berkshire Hathaway meeting in Omaha. And Jennifer, we're so pleased to have you moderating our meeting this year. So welcome everyone to the 2025 annual meeting. It's wonderful to see so many familiar faces and many new faces from around the world. As Jennifer mentioned, I'm in Istanbul, Turkey, where we run the Talas Turkey Value Fund with Mesut Deliotolu and Kutay. And as many of you are aware, Talas owns some of the most undervalued assets in the world. 14 years ago, we started this journey with just a handful of investors and under $1 million in capital. And thanks to your trust and long-term commitment, we've grown tremendously. Some of you have been with us from the very start, and I'm deeply grateful for your continued partnership. And to our newer partners, welcome. Today, we're going to review the fund's performance and process, then highlight our portfolio of compounders with a few case studies. Then I'm going to share how we have implemented some incredible AI technology into a very impressive AI research platform that you can all utilize. I'm going to introduce to you the Titan Strategic Income Fund because we've had significant demand from both internal partners and external firms and family offices to spin out the structured dividend strategy into a standalone product, both so that internal partners and external partners can get additional access to that tremendous strategy. And we have some fun surprises for you as well. I'm looking forward to sharing these things, and we'll wrap up by answering all of your questions. So at every step, I think you'll be hearing common themes: long-term compounding through discipline and value-focused investing. And this approach has guided us from the very beginning, and it continues to pay off. First, of course, a quick disclaimer. I'm very pleased with our fund and ecosystem, but this discussion is not an offer to sell or solicit solicitation to buy any securities. So let's talk about our mission and how we're performing this year. Our mission has always been simple: to provide a world-class capital allocation vehicle that builds enormous wealth for our long-term partners. And we stick to this time-tested strategy of buying great companies when they're unloved or undervalued and holding them for the long run. And the disciplined strategy works. We've navigated bull and bear markets with it, and it continues to reward all partners. And we are having another great year. Through July, which will appear on your October 1st statements, the fund is now up 23% net. We're really pleased with this performance. It significantly outpaces the broader market, but I want to remind everyone and emphasize that we remain focused on the long game. We measure our success in years and decades, not in months. And as I will share, the future looks very promising for our portfolio. Our firm itself continues to grow. As mentioned, we started with less than 1 million back in 2011, and today we've grown to nearly 30 million under management at Peterson. This steady growth reflects the trust you placed in us and the power of compounding over time. Importantly, being relatively small and nimble is an advantage. It means we can pursue opportunities that giant funds might overlook. We remain fully committed as fiduciaries of your capital, and importantly, my family's money is completely invested alongside your own. So we are all seeing our capital compound, and that's our ultimate mission. But the process determines the outcome. So I'm going to share with you our very specific investment process, which is designed to create alpha at every step. So how do we achieve this outcome confidently? It comes down to a disciplined investment process. And this process will lead to an outsized return. We've been following the same process since the inception of the fund. First, we study the top investors in the world. Every quarter, we pour over 13F filings where portfolios of investment legends like Warren Buffett and Lee Lu are available, and they're making significant allocations. And given all of their resources and wisdom, it's worth taking notice. Academics have proved that this is advantageous, and it's a great starting position for your own research. So these legendary portfolio moves are public, and they often can spotlight a potential opportunity. So it's like getting a stock tip from the smartest minds in finance. So as I'm going to show you later, we've developed proprietary technology to synthesize these 13F reports, and essentially across 100 different funds, each quarter, we find that there are only 400 to 500 unique stocks. And the environment, the US environment alone has 6,500 securities. So this process focuses our attention on less than 10% of securities in the market, and the focus is on the firms that matter. Second, we perform deep fundamental analysis. We dig into the financial statements. We're looking for competitive advantages. We're looking at management quality. We're looking through all the fundamentals. And our goal is to determine the intrinsic value of a growing business and confirm that a significant gap exists between that intrinsic value and the stock price today. So in a few minutes, I'll share with you a very impressive AI research platform that we built, proprietary platform we built in-house. Using AI, we have condensed weeks of analysis, perhaps months of analysis, into 20 minutes or less for any public company in America. It's totally unprecedented what we've created. This scale allows us to identify opportunities at incredible speed, and we're extremely progressive in this AI space, and these bold moves have proven to be outstanding opportunities. In step 3, we apply a practice we've termed structured value. And in the simplest form, after identifying an opportunity, we don't just buy it like a retail investor in the stock market with a market or limit order. Instead, we write a cash secured put as a tool to gain access to the equity. We get paid upfront for our commitment to buy the stock that we want to own, which reduces our cost to below the prices in the stock market. And then finally, in step 4, we address our allocation and our position sizing. But not every great idea deserves an equal slice of the capital pie. And we work hard to determine that allocation objectively. We concentrate more capital into our highest conviction ideas. Portfolio sizing ensures that the impact of our best ideas are maximized while the overall risk is kept in check. So each step in this process adds value, it adds alpha. And together, this methodical process is the engine behind our results. And what does that process deliver in practice? When we talk about compounders, we mean businesses that grow their earnings and value steadily year after year. These are companies we would be happy to own for decades or more, the kind you can hold forever, as long as they remain great businesses. And Buffett often says his favorite holding period is forever, and Phil Fisher reminded us that if the job has been correctly done when a common stock is purchased, the time to sell is almost never. So what do we look for in our portfolio companies? We have three main criteria. We need a superior business model, we need an extraordinary management team, and we need extraordinary value. And when you find all three, it's hard to go wrong. So our long-term mindset is essential for success. These things don't happen overnight, but they will happen over time. Seth Klarman put it best. He said the single greatest edge an investor can have is long-term orientation, and we really take that wisdom to heart in our portfolio design. Our holdings on the right side of this screen, you'll see they all have net cash positions, positive cash flow, and they're growing. We own high quality undervalued businesses that we can own indefinitely, letting the time and compounding do the work for us. Now, I'm excited to share an innovation that's revolutionizing our research, and it provides us with an enormous advantage. Some of you are probably watching on your computer, so I recommend you grab your phone. Others, I suppose, are watching on your phone, so you may need a computer or a second browser, but please join me in visiting our our AI research platform that we built in-house. It's available at veritasalpha.com, written at the bottom of the screen. That's VERITASALPHA.com. So this is our AI research platform. You can click Financial Report Generator. Just imagine for a moment the amount of work required to keep track of the developments within thousands of companies in the US market alone. Even with teams of analysts, there are thousands of pages to read. There's models to create for every single firm. And in my extensive discussions with the sell side research firms, a single analyst can really handle just a few dozen reports effectively each year. So imagine having infinite analysts who can read all the 10Ks and crunch number 24/7 in seconds. We can program instructions once and then scale it to every company in the world. And that's what our proprietary Alpha One AI system provides. We've made this available to you at www.veritasalpha.com. The platform generates a comprehensive professional fundamental analysis, Wall Street level professionalism on any US company in about 20 minutes. Something that would traditionally take weeks, maybe months of human manual effort. And now we have speed, we have scale, we have specificity, and this research has never been possible before. As you visit the website, you'll see there's a few tools available. We have made them available to the partners in this community for free. You'll find the report generator. That's where you're going to type in the ticker, your email address, and you will receive any report that you request in 20 minutes. You'll also, I think, appreciate that you can request any firm in India. We are moving this into global markets. Currently, you can look up 6,537 companies in America, another 4,000 in India, any public company. You can also run a summary in the Total Market Insights report of every firm in that region's market. We cover Turkey, we cover the UK, we cover so many different regions, and it does a one-page snapshot of every firm. It also organizes it for you, prioritizes your research for you. When you run the firm on the US, you'll get a report, a PDF of 6,537 companies, prioritized in the way that generally we think is a good way to start. When you run this summary of every firm in the market, it performs a data-driven output that covers 20 years of history. So the key is that these AI reports are complementing human judgment. Veritas Alpha doesn't replace our team's decision-making. It augments the speed and scale and accuracy. It surfaces insights and it checks data points that we could miss so we can make better informed and more rational decisions. It enhances our rationality completely. And it's like having an army of analytical PhDs who never need a break, never need to sleep, never need vacation, and never complain. I'm really proud of the tool we built. I want to share that with you all. If you're ever researching a company or even receive a stock tip, open your phone, go to veritasalpha.com and order the report. You'll find so much value. We run SWOT analysis, Porter 5 forces. We answer 15 questions of the scuttlebutt method. We go through a risk summary. We actually work out discounted cash flow analysis, triangulate values through many different metrics, and offer a bull-bear base case scenario. We even produce an unbiased short thesis on what could go wrong. So we estimate the human cost to develop one report is about $5,000. But it reminds me of something that I learned from Peter Kaufman. Peter Kaufman is the author of Poor Charlie's Almanac. It's not how many apples in a seed, it's not how many seeds in an apple, it's how many apples in the seed. And I think there are so many apples in these reports. Think of them like a seed. You can go and run any report that you'd like. It's very simple to request this analysis. You just enter the ticker and the report will be generated in real time for you in 20 minutes. So as I mentioned in your report, you're going to find decades of consolidated data. You'll find all the frameworks populated like a SWOT analysis, Porter's 5 forces, Phil Fisher's scuttlebutt questions. Again, we address the risks and all of the methods commonly endorsed by Warren Buffett and the value investing community. And we have so much functionality and technology built into these this AI platform. We now have our 13F. Here's a slide with all of the functionality. We're doing things like our 13F analysis and prioritizing our research. And we can now perform bottom-up valuation in 20 minutes on any firm that catches our eye. This jumps us ahead, weeks ahead. We can analyze every competitor to an existing company, just 20 minutes. And frankly, it runs in parallel. So you can order an entire sector and they will all show up at once. I'll provide you with a very real example, something that we all know very well, Berkshire Hathaway. So this page on the left is just one page of data analytics within the analyst report. It contains 20 years of essential fundamentals, including the firm's yearly return on equity and ratios like price to book, price to sales, price to earnings, enterprise value to EBITDA, every value over the last 20 years. And if you look at the graph, this image on the bottom, it will easily show you how the firm is performing. A great firm is going to have very high sustainable return on equities with compressed fundamental ratios. You want to be a buyer when the fundamental ratios are at or near its 20-year low, and while the company continues to generate high returns. So we've held Berkshire for over a decade. It remains a cornerstone in our portfolio, and it's the epitome of a steady long-term compounder with downside protection. In fact, 6 years ago, we started showing this slide. We projected that Berkshire's value would reach $700 a share by 2030, and the company is on track. The bottom line here is that Berkshire fits our criteria to a T. It's a collection of extraordinary businesses bought at favorable prices, run by legendary managers. It's a low-risk compounding investment vehicle that we can own indefinitely as part of our infinite compounding portfolio. But let's shift to another unique example, one where we've applied an innovative approach to capture the value. We've talked about this in the past, our investment in Alibaba. Now, this chart available at Veritas Alpha illustrates a very high return on equity with multiples so compressed you can hardly differentiate between them on the graph. This is highly unique. You can look through the 6,500 page report. It's hard to find a graph that looks quite like this. And as sentiment returns, we will see growth in earnings and we will see multiple expansion, which gives us potential for enormous growth in price. Alibaba is a case where we wanted to own the business, but we could also get a better deal on the stock when we apply structured value. So instead of buying the shares outright, we sold a series of puts as a tool to buy the equity, and that pays us up front for our commitment to buy the stock if the price declines further. So you can think about this a little like selling insurance on a company that we want to own. So in this illustrative example, and you can look and basically do this currently, we collect $30 up front. So the stock is selling around 120. If we want to buy the stock as a retail investor, we just put in a market or limit order and pay about 120. But there are other ways to do it. The structured value method. We collect $30 up front as a premium and put a strike price of 120, committing us to buy it for 120 over the next couple of years. And if Alibaba's price falls below 120, we're pleased to buy the shares for a net cost of only 90. The strike price minus the premium that we've received. So this is a bargain. And some people will recall we also can utilize techniques like tax loss harvesting to capture short-term write-offs for our partners. Now, I know James Ebert's on the call, and last year he was an intern for us, and he converted some of these highly complex strategies into musical notation so we could pass knowledge on to a broader audience. Here we use our open circles to reflect opening a position and close circles to represent expiration or closing out a position. And in the first measure here, this is what we've done with Alibaba. And in the first measure, we repeatedly sold puts until we gained our desired equity exposure. And as the price of Alibaba declined below our strike price, we were able to sell short-term calls in the second measure as a technique to minimize the losses and capture short-term tax write-offs as we exited the stock that had declined. But at the same time, the business was thriving and we were able to buy very inexpensive, long-dated call options, providing enormous upside potential that go out until December 2027. So this structured value approach turned a good investment into a great one by tilting the odds in our favor. And we wouldn't have achieved this kind of risk reward by simply buying the stock at market price. By selling the puts, instead of just buying the stock, we create this scenario where we benefit from several directions and potential outcomes. So now that I've shown you how structured value can enhance the returns, let's talk about how we uncover these unique opportunities in the first place. Specifically, by integrating our AI platform, Veritas Alpha, with our 13F analysis, we're able to identify many gems. Now, this is a recent analysis we've performed. We actually put this slide together earlier this week. These are firms that are widely admired by the value community. They're owned by some of the great investment professionals, and they have highly attractive fundamentals. And this intersection of the 13F and the bottom-up fundamental research at scale across 6,537 companies in the United States is notable because we created this slide last week, selected 10, and then it was announced 2 days ago that Warren Buffett had been buying 2 in secret, United Healthcare and Lennar. Out of the 10 that we selected, 2 were being bought by Warren Buffett. Imagine that conviction. It's just incredible. So this deep detective work is how we actually identified another core holding. Daily Journal is a very small company that was managed for 43 years by the one and only Charlie Munger. And when we looked very closely, it was clear that it had stacked all of the odds of success in their favor, and it was inside our own circle of competence. The company is packed with off financial statement value. It has culture, brand, competitive advantages, and outstanding business models that don't show up in the financial statements. And Daily Journal is a perfect example of something that's misunderstood and has hidden value. On the surface, it's a small California company. It looks like a boring newspaper publisher, but under the hood, it has a growing software business and a large investment portfolio. No Wall Street analysts cover the firm. Daily Journal doesn't waste any time on investor outreach. It's completely off the radar to most people. And the market doesn't appreciate what's inside a massive investment portfolio and a value software subsidiary called Journal Technologies. So consider the numbers. Daily Journal's market cap is about 590 million. It holds a 380 million stock and cash portfolio net of debt. And that leaves only around 210 million that the market is attributing to the operating business, which is notably Journal Technologies, the software division. Because they expense a lot of the development costs up front, the true earning power of the software business is hidden. In other words, revenues are growing rapidly. They will soon reach 100 million a year, yet the market is valuing this promising SaaS business at just $200 million. And as this $440 million equity portfolio grows into the current market cap, we keep an enormously successful software business for free. Meanwhile, Charlie Munger appointed board members and the current CEO, Stephen Myhill-Jones, everyone is aligned and focused on the long game. We have top-notch level stewardship at this firm. It's a world-class business model. It's very cheap. There's limited downside. Daily Journal has potential to deliver significant upside as the software business continues to thrive. And it's exactly the kind of off-the-radar, high-quality opportunities that this approach is designed to discover. So let's switch gears again for one moment. A partner asked for some comments on a very different kind of hidden value, Naspers, which is essentially our gateway to Tencent. Now, Naspers is an indirect stake in the Chinese tech conglomerate Tencent, the powerhouse behind WeChat. And we are accumulating this at a steep discount. Naspers is essentially a holding company based in South Africa, traded on the Johannesburg Exchange, and its crown jewel is the large ownership stake in Prosus, which in turn has a large ownership of Tencent. So this double holding structure has led to a remarkable pricing anomaly. The market values for Naspers are far below the market price of all of Naspers is far below its Tencent stake. And in addition, both Naspers and Prosus hold additional assets. So by purchasing Naspers today, you're effectively buying Tencent at a huge discount to the cost of Tencent. So at current prices, Naspers market capitalization has 30% upside potential just to reach the value of its look-through Tencent ownership. And as we wait for that gap to close, Tencent itself is compounding. Tencent's price is growing. So you're getting Naspers additional, and then you're getting additional investments in Naspers subsidiaries for free. So why does this gap even exist? It's partly due to some technical factors, the listing locations, some tax considerations, but this complicated dual holding company structure. But in the meantime, this value gap will shrink meaningfully. So management's taking different steps to unlock the value, including buying back shares. And savvy investors are taking advantage of this mispricing. So if Naspers discount to Tencent were eliminated today, the stock would need to appreciate another 30%. And that doesn't include, as I've mentioned, the other items like their classified food delivery payment businesses. However, we anticipate Tencent's value to being approaching $1 trillion. They will join the $1 trillion club with Berkshire Hathaway. And from here, Naspers would need to double just to reach that Tencent value. So we've been accumulating Naspers. We were accumulating it in the 20s, 20 per share range. Now it's in the mid 60s. And in the coming years, we look forward to this price doubling again. Now we come to another exciting moment of this presentation. For several years, we've been asked to spin out the cash management dividend capture strategies by both internal partners and external friends interested in our specific methods. So I am very pleased to announce, starting October 1st, our structured dividend strategy for cash will become available to all through our independent entity, Titan Strategic Income. Long-term partners will remember that for several years, we've been developing our augmented cash management strategy that allow us to wait more patiently with a cash reserve without it being a weight on our long-term performance. And today we're making that vehicle available to you to generate safe, steady income on idle cash. Again, we're calling it Titan Strategic Income. The theory behind Titan is to capture high premiums on stable quality businesses, effectively creating a synthetic dividend stream. In essence, we have found a way to earn high interest-like income on cash collateral utilizing short-term structured products and structured value techniques. So this opportunity exists in part because large institutions ignore this space because they can't scale it into the billions. And everyday investors find the strategies too complex. And that perfect combination leaves this gap wide open for us. So by selling carefully selected puts on blue chip stocks, especially when fear temporarily inflates the option prices, Titan can earn outsized returns on our cash. By selling these puts on the carefully identified opportunities, we're going to get paid upfront for an agreement to buy the stock at a discount if it falls. And the Titan approach provides interest-like income without sacrificing liquidity. These are short-term holdings, and our option prices are lasting just a few weeks. So the capital continues to stay in cash and get recycled as collateral that's repurposed. So in summary, Titan Strategic Income is our answer to the low yield problem. It's a way to make our cash work harder for us without locking it up indefinitely. So this is an illustrated example of how the structured income flows in practice. You can sort of think about it like a wheel, keeps turning and paying out. We start by selling a put on a stock that we like. We immediately collect that premium. And if the option expires without the stock hitting our price, we keep the premium and simply recycle the collateral for the next opportunity. If the stock does fall, we end up buying it at our target price and we strategically exit that holding. And again, we're back to cash and we start selling and writing puts again. So in this way, our cash is continually earning the strategic income. And we can repeat the cycle over and over. We've been doing it inside of the Peterson Capital Management Fund on our cash for years. So with a basket of 60 or fewer securities, that's like 1% of the US market, we can string together a series of these synthetic dividends every month. It's flexible. It's a high yield strategy. We earn strong income on the cash, we stay liquid, and we focus on firms that have our downside protection. And let's take a quick look at some of the numbers. To validate this Titan Strategic Income strategy, we backtested the structured dividend approach over the past decade. The results are very impressive. Over 10 years, the Titan strategy would have produced 13% annualized on our idle cash, roughly quadrupling the money. In contrast, over that zero interest rate stretch we're all aware of, cash during that period would have barely moved the needle, particularly in the last decade, it was earning zero. But even today, if you were able to stretch at a 5% yield on your cash, it just doesn't compare to what Titan Strategic Income is able to produce. It will outpace any cash or the alternative, and it keeps the funds liquid. So at Peterson Investment Fund, we are sweeping our cash into Titan on a quarterly basis, and we will pull it back when we have opportunities to deploy it in great long-term opportunities. So this is similar how we've been managing the cash inside of the fund for years now, but now it's available to all partners who want additional exposure or have excess capital that they want to put to work. The Peterson partner capital will, of course, not pay any Titan fees. And if you'd like to join us as a Titan partner, the terms mirror the Peterson terms. There's a 5% annual hurdle rate, means we don't ever charge on the first 5%. There's a shared 25%, 75% upside beyond the 5% each year. Titan also has a zero management fee class for all capital commitments in excess of 2 million. And portfolio manager Nikhil Jaisingani will be responsible for the day-to-day activities at Titan. And I expect that his focused results on the day-to-day create gains that are superior to what I can do alone inside of Peterson. We are prepared to take capital this month. So if you're interested, reach out to me directly. You can also reach out to Mackenzie. You'll also be talking with Nikhil. Peterson Capital will officially begin using Titan Strategic Income for our cash on October 1st. Now, before we conclude, it is a great honor. Oh, I forgot about one slide. Of course, 13% annualized, some additional back testing that shows the cumulative results year by year over the last decade. Now, it's a great honor to provide actually introductions to our expanding team of experts. In a moment, you'll hear from them. We have Mackenzie and Tamana helping us out at Peterson Capital Management. We have Masout and Kutai working on the Talas Fund here in Istanbul. And we continue to run the Talas Turkey Value Fund very well. Nikhil will be managing the Titan portfolio. And then our lead developers, George and Yankun, have been instrumental in building the Alpha One AI technology that's available for you all at veritasalpha.com. Of course, we'd also like to thank our trusted service providers who keep Peterson Capital Management entities running smoothly behind the scenes. The partners will recognize our tax and audit firm, Spicer Jeffries, and our fund administrator, Eulish and Associates. Interactive Broker serves as our prime broker, and Chase Bank handles all of our corporate banking, and Investment Legal Law Group is our legal counsel. For those who have qualified capital and IRAs, we have worked commonly with equity trusts to keep those tax shields in place.